Joe Biden officially sworn in as the 46th president of the United States today, and that got us thinking, new president, new portfolio. So our traders have each come up with the 2 to 3 names they're betting on under Biden. So Steve Grasso, kick us off.
Right, so let's just rip down. You've heard me say these names before. It's Trinseo, TSE, WestRock, WRK, and Olin Corp, OLN. This hinges on the growth to value rotation. It hinges on the trade war becoming less intense. And it also hinges on accelerating fundamentals. All these 3 companies have accelerating fundamentals. This is the reopening trade. This is about higher rates. They don't have to scream higher, but rates on a percentage basis have jumped about 114% since a couple of months ago. That's enough to keep this trade going in my mind, Melissa.
If it were President Trump still in office, Steve Grasso, would those names have changed? Because you were long those names during the Trump presidency.
Yes, I was long those names going into the election because the lower Trump went in the polls and the higher Biden went, the higher there was the odds on a rotation trade. So President Trump sat on rates for his whole 4 years, and they didn't go anywhere. So they pushed people out into the risk curve, I should say. Lower rates, you push them into technology stocks. And now with President Biden, you have the potential for rates to move higher. And that's what happened going into the election because it was all but done that Biden was going to win. That's when you saw value actually start to tick up. Trinseo is up 130%. Olin is up 200%. WRK is up 60%. And we're still in the early innings since September.
All right. Karen, what's your Biden portfolio?
Well, it's a Biden acronym. It's BUT, B-U-T. And it's XLF, which is banks, for the reasons, rates going higher. And we haven't really seen that net interest margin as positive as I think it will become. And it's also the economy improving. That's good for banks. If they can increase their loan, the amount of loans that they make, that's a good spread for them as well. So that's the B, is banks. United Rental, I think with this new administration and the House and Senate both being blue, that an infrastructure bill has a higher chance than it's had in a while. So United Rental would be squarely in the crosshairs in a good way of an infrastructure bill. And then the last one is really a reopen trade. TJX, of all the retailers, it really doesn't lend itself to a online business the way some of them have been able to shift. And so when the reopen trade happens, I think the shift back to in-store TJX will be huge. So that is my butt trade.
It's hard to be a Maxinista and not go through the racks yourself. I like how Karen chose to go butt instead of tub. That may be open to interpretation. Guy, what do you make of this basket?
Yeah, you're leading me down the primrose path, so I'm not even going to go near that. But listen, I think Karen's clearly onto something. I mean, TJ Maxx is one of those stories that just seems to work in almost every environment. So, I think acronym or whatever you want to call it, notwithstanding, I think Karen is onto something with. I say you're going to make me say it. I was going to say with her, and then I thought I better not say that. So I'm just going to avoid it.
With her basket of stocks, Tim, what is
exactly.
your portfolio?
With her basket of stocks.
It's always tough to follow, but I'm going to try. So, look, the three sectors are cannabis, online sports betting, and emerging markets. And these are all areas that I think benefit from the Biden presidency and trades that have been picking up momentum going into this actuality today. So, cannabis, we know the story of the Georgia runoffs. It's been a 20%, 25% move for the sector. My pick there is actually GW Pharma, one of the largest plays in my ETF because it's actually underperformed a bit. They just gave an announcement on Epidiolex pre-release numbers, incredibly strong story, incredibly strong franchise. Online sports betting, the fiscal hole created by fiscal policy around the country and the result of COVID dynamics mean that online sports betting is off and running, and it's not going to plug all the holes, but they're sure going to try. This and cannabis certainly get that fiscal nod. And the play there is DraftKings. We've talked about it. The valuation is difficult. but a market share story and a leader and the presumption that they will get X% of that market share as this grows, no question. And then emerging markets. Look, it's We Are the World, by the way, almost 35 years ago to the day was recorded, which is, I know, very exciting for Guy Adami. The emerging market story finally broke out after 2007 highs had been, essentially a wall of resistance for a long time. Lower dollar, lower interest rates, reacceleration of the global economy, and maybe a little bit more cooperation. But that's not really the trade here. The trade is that emerging markets are cheap to themselves, and this trade is finally breaking out after a decade, and I think you stay there.
35-year anniversary of We Are the World being recorded. That's the kind of quality information you only get here on Fast Money on CNBC.
That's what we do here.
Yeah, exactly. Guy, what's your basket of stocks?
Well, before I get to my basket, I will say my upper register is still as flawless as it was 35 years ago, but I will spare you singing any of the verses of that song. And I'm with Tim on DraftKings. If you notice, it closed above that 52 level. I think it was 52 where they priced that 32 million share secondary. So that stock's traded really well despite that. But my basket are basically two names. And to answer the question you asked, Steve, they worked under the Trump administration. I think they'll continue to work maybe faster now. But the first is the IBB, the Biotech ETF, which today made another all-time high. Seemingly every day continues to grind higher. And I think you're going to see maybe a further push into the biotech space in the next 4 years. And the other name is something we've talked about since the spring when it was around $132 or so, and that's Caterpillar. Now, people will say, wait a second, Citi downgraded the stock today, and they did, but they also raised their price target from 175 to 205. I think that's going to wind up being light in terms of price target. They report at the end of the month. Valuation is reasonable, actually, and I think you're going to see some big numbers out of Cat on January 29th. So Cat in earnings at the end of the month, and stay with the IBB, which has been a monster all year, or all of last year into this year.
Shepard Smith here. Thanks for watching CNBC on YouTube.